Okay, everyone. Welcome to the Alliance of Angels webinar today. Thank you for choosing to spend your morning with us. Very much appreciated. Before we get started, I want to share a few points of logistics. Again, this is a regular Zoom meeting that we are all in. So if you would like to ask our speakers any questions, feel free to jump in. Speak up. If you'd rather not and you would rather be send a question through chat, feel free to do that as well. We'll have some folks keeping an eye on those chat windows where we're best, right? If you have a burning question, feel free to jump in so that our speakers can help take care of that for you. But that being said, if you are not speaking, we do ask that you please put yourself on mute, right? So we don't have like background noise coming in, and we just want to have a great learning experience for everyone. And today it is our pleasure to have, we're doing a fireside chat, sort of Ask Me Anything, right? So it's hosted by Aseem from Madrona. He just joined, one of the latest partners in this group. And also Erik Carter from Seattle Bank. Seattle Bank's one of the sponsors of the Alliance of Angels. So before we go ahead, I'm going to share a little bit about my organization. I run an angel group called Alliance of Angels. We have 140 angel investors in the group. Every year we put about 10 million into 20 companies, give or take. Most companies that are fundraising from us, they're looking for a total of between $500,000 to 1.5, and my typical check size is 250 to 500. Right? If you're interested, again, the entrepreneur, if you're interested in approaching us for funding, feel free to send me a note. My contacts at the bottom of this slide. Sector-wise, we may be about half IT, a quarter consumer. The rest is life sciences, hardware, energy, etc. But that's it. We are a sector-agnostic investor. We are also stage-agnostic. Right, so a hard filter, actually, they're quite similar to Madrona, is that we focus primarily on companies that are headquartered in the Pacific Northwest. So again, if you're an entrepreneur, or maybe you're an angel investor and you're interested in finding out more about my organization, my contact information is at the bottom of this slide. All right, so now I'm going to stop talking. I'm going to pass the session over to Erik Carter. Erik Carter from Seattle Bank. Erik's going to share a little bit about his organization and introduce our speaker for today.
Jane, thank you so much. And thank you for everybody for joining today. My name is Erik Carter. I'm a Deposit and Treasury Officer with Seattle Bank. Seattle Bank, as mentioned, has been a sponsor of the Alliance of Angels for a number of years. And I've been personally able to get involved over the last year and have really enjoyed the experience. It's a wonderful group, a lot of knowledge and a lot of deal flow going through there. So it's been great to be a sponsor and to be part of that. And clearly, if you have any questions about Seattle Bank, please feel free to reach out to me afterwards. Always happy to take a look at what your banking needs might be. So with that, let's go ahead and get the discussion started for today. And as EJ mentioned, we do have some questions we're going to run through, but to the extent possible, we'd love to keep this an interactive resource for everybody to be able to jump in and ask their questions. So please allow me to introduce our speaker today. So Aseem Datar is currently an investment professional at Madrona Venture Group, where he spends his time identifying and evaluating new opportunities. He also works with existing companies on product strategies for large scale growth. Aseem joined Microsoft early on in his career and spent over 17 years there in a wide variety of roles, including cloud, AI, machine learning, SaaS, commerce and payments, devices, and OS. Most recent role he had was as GM and COO for Microsoft Cloud. During that time, he saw Microsoft's Azure program grow to over 20 billion in annual recurring revenue. So certainly no stranger to rapid growth. Aseem is an alumni of the University of Washington and the Harvard Business School. He actively serves as an advisor to various tech companies, often at very early stage, and is a founding member of an investment fund in the Pacific Northwest as well. Aseem, it's a pleasure to have you here today. Welcome. Thank you for making the time. One of the questions I wanted to start with is around your move from operator to investor. And I was hoping you could tell us a little bit about that experience, what pushed you in that direction, and what has your experience been like so far with that move?
Yeah, firstly, Erik and team, thank you for having me. It's a pleasure to sort of see so many of you on the call. Some familiar faces, some familiar names. The Seattle ecosystem is pretty tight. So hello to everybody, and thanks for making time and spending the hour. It's been an interesting journey, sort of coming from Microsoft. Like you mentioned, I spent 17 years there in various roles. I first came to Microsoft as an intern and stayed there, through different roles as PM, product marketing, sales, and then most recently on the Azure team. And then, these were very deep operating roles, and I learned so much out of just operating, in different businesses across devices, payments, commerce, gateway, and then most recently cloud. And then, having done various operating roles, and I used to sort of also invest inside as an angel, talk to a bunch of startups as they were building their business on Azure. And one thing that struck me was that, while I enjoyed being an operator, I wanted to take that experience and bring it to bear where it could be helpful to other founders. And that was a little bit of an aha moment, but also a little bit of a longer journey, because a career adventure doesn't happen overnight. I think you want to be comfortable with what you're doing and playing in different spaces, growing broad at the same point of going deep. And some of it is also while helping founders, it's also transformation in your own self, where you're moving from player to sort of coach player on the sidelines. And so that was a big learning. But I'm just amazed by the ecosystem, the activity, the hustle, the growth, and frankly, the innovation and opportunity ahead in the Pacific Northwest, with founders coming from big companies and starting new companies and going after big, hairy problems. So that was kind of the short answer to your question on like, hey, what drove me here and what were kind of the exciting elements. And then frankly, Madrona as a firm has been around for a long, long time, great operating experience, ex-operators, ex-investors, and sort of join a firm like Madrona is such a privilege to be able to work alongside with founders and teams who are going after big, hairy problems.
So you mentioned the Seattle area being a really strong ecosystem. Is there anything in particular, do you think it's the big firms that are really driving that, or is there something more unique that makes Seattle a good ecosystem for startups?
Yeah, firstly, the weather. It's amazing, isn't it? No, I think there's a few factors to it, right? One is, I don't think that there's any debate that Seattle is the cloud capital, right? And I think with Microsoft, with Amazon, with Google, and a bunch of other companies sort of driving innovation in that space, it's just fitting that a lot of talent, a lot of great engineering DNA comes out of those big companies. But there's also great educational institutions like UW, Seattle U. All of these institutions are producing great engineering talent, are producing great business talent, like the School of Business, the Boston School of Business, the Foster School of Business. I think it's just amazing to see raw talent coming out of those educational institutions, and I'm an alumni, so I can attest to those programs. Being deep and very detail oriented that foster your thinking and change your thinking in different ways. And then there's other institutions like the Allen Institute of AI, that also contribute towards this growing amass of talent that's available in the area. The other thing to also note is that it's not just the cloud, right? I mean, Amazon has built varied business lines, and there is so much deep focus that company alone has driven in the ecosystem, where people understand supply chain, they understand payments, they understand gateways, they understand logistics, they understand retail. And so all these people are coming in and looking at opportunities in different sectors with a tech background, and then approaching them in a more systematic way. It just makes Seattle ripe for innovation.
Yeah, that's a great point about some of the additional elements that Amazon brings with that just cross exposure to their business model. So very interesting. With the Seattle ecosystem, would you say that there are areas that are deficient that could use more growth in order to encourage the startup ecosystem here?
Yeah, I mean, I wouldn't say deficient in some ways, but I would say that I think we're right at the cusp of hyper growth in those spaces, right? And one such area is consumer, right? Mm-hmm. And again, I think it's not that there aren't great consumer companies. There've been a ton of great consumer companies, but there's mostly a deep focus on enterprises given the background of the people. But I think with, like I said, I mean, I think with Amazon also operating in a huge consumer business, I think people are coming in and tackling those problems as well from a slightly different bent of mind and saying, look, there is also an equivalent opportunity in those spaces to go transform, things like D2C type of business models. And so I think that's an area that's ripe for growth. Needless to say, Web3, metaverse, crypto, all these areas are just at the point where you're hitting the hockey stick curve. And you see a lot of focus with great entrepreneurs and founding teams, sort of looking at those spaces and saying, gosh, how can we use that in a more meaningful approach to kind of get that 10x scale?
Yeah, it certainly does feel like a lot of those are right on the cusp. So it's a very exciting time. When you're looking at opportunities specifically for investments, are there certain things that you're looking for that are like red flags that might cause you to walk away? Or alternatively, are there common threads in firms that you do end up investing in that, really give you a sense that it's going to be a successful venture?
Yeah, I mean, I think I get asked this question a lot, right? Like, what makes an element of a successful venture? And I think it really, I mean, of course, there is the standard templates around like, hey, you got to be playing in a big market, you got to have a deep focus on a particular problem, you got to have a whole bunch of customers creating demand. I mean, I think all those things are great, but I think where it really boils down to me is kind of the conviction that the founding team has around the problem. The desire to succeed, and frankly, the make in the DNA of the team. I mean, a lot has been said about, the ups and downs of startup life, and the fact that, what you envision to begin with might not be the thing that makes it successful, and you might turn out with a completely different product or service. But I think the single most common factor there is the ability to learn fast, fail fast, and change fast. Yeah. And I think teams that have that as a core part of their DNA, are the ones that I think succeed in the longer run. And yes, there's big markets, there's use cases that have to be pointy, there's tech that has to be differentiated. All those things are quintessential, but at the end of the day, I think it's super important to have a team that is able to sort of learn and really read the signals from the noise out there, right? Because I think a lot of it is about distilling what and why things need to change, and you need to keep iterating. Yeah. So I would say that forms the basis of our thesis in terms of like, hey, it's great product, great teams, going after big and hairy problems in a differentiated way. And in the long term, that creates compelling, long-term value and not just a short-term transfer of value.
You mentioned the why behind a startup, and you had published an article a while back where you had expanded on that a little bit. I'm wondering if you could share your thoughts on why you think that question of why is so important for startups to keep coming back to. I found that really interesting.
Yeah, and one of the things that I've sort of cut my teeth in is and again, product managers would agree with this, is to try and figure out the why of certain things, right? So I think it's important to ask that, continually keep asking that question, because you learn so much when you start to go 5 clicks deeper, right? And my boss at Microsoft, Jason Zander, somebody whom I'm a huge fan of, always used to say the 5 whys, right? And 5 whys kind of get you deeper and deeper into the problem space, into trying and understanding what's the real driver and what's really happening within the business or within the product or within the customer base. Because when you go 5 clicks deeper, you really come down to the crux of the issue. Yeah. So whether you're doing a startup or whether you're going after a problem, it's interesting to understand, why do you believe it's a problem? And again, when you ask the 5 whys, it kind of gets down to the core of, so does this really matter or does this not really matter? Mm-hmm. The same goes with, doing use cases discovery when you're talking to customers. Why are they asking, why do they feel that there's a gap in the market? Why is it such a challenge? Why is the cost so high? And so I think you really get down to the essence of the meat of the problem there, which then informs the way in which you should change direction or not. So I think that to me is really the crux of anything. And again, I think when you're a founder, when you're going after a problem, you really have got to answer the question of like, hey, why is it that I'm after the problem? What's the passion? What is the driving force? And then another big one, I would say, for founding teams is the question of the why now. Right? Like, why is now the right time to solve the problem? Like, are there any global macro trends that are kind of pushing or serving as tailwinds, or sometimes are they serving as factors that go against you that you will have to go mitigate? I think a good example of that is, Zoom, the product that we're all using right now. I mean, Zoom's been around for a while. Why did the adoption go gangbusters? Because of COVID. I think there was a certain macroeconomic factor that forced people to have a video first approach, and that kind of served as a huge tailwind for the company's growth. And as you're and my sort of 2 cents or takeaways from this is, as you're thinking about building a company, it's important to understand, like, why is now the right time to go after that problem? Because sometimes you might be way ahead of the market, sometimes you might be way behind the market, but trying to understand and mitigate those factors would be super critical to success.
Yeah. Certainly bringing a product that may be great on its own right to market before the demand has really been realized, you're going to fall on deaf ears, and that timing is going to hurt you in the long run. So do you think that there is a certain element of luck in the startup when it comes to those big macro trends, or do you think you can really predict a lot of those if you've got the right team and the right forward thinking members looking at the problem?
Yeah, I look at it slightly differently, and I say there's a certain amount of preparedness, right? And there's a certain amount of forward thinking, that a founder needs to have. Well, she or him needs to look at, like, where is the world going, and there is some thesis that somebody's building as they think about starting a company to say, hey, where's the world going? What are the problems do I see? Are these real problems? And so I think when you're doing a company which is, based on thesis or principles or things that you believe in, is almost more critical than trying to, like I say, like, time the market in some ways, right? And you can launch great companies, despite some of these headwinds, because there is a sector in the market that might experience the problem today. Not everybody might, or the tailwind might come in a few years down the line, and you're sort of getting to that MVP or readiness, so you can ride the wave when it does come. And one such area I think that people have invested in for quite a while has been AR/VR, right? And AR/VR companies have been around for a while, and they've shown some promise, but I don't think that there's been a wide adoption as yet. And I think there's a growing thesis that, look, at some point this is going to go, be super real, and it's going to proliferate everywhere. And people will tell you that there is a world where holographic meetings could be possible. And the question is that what's the right time? And so the folks who are engaged in it today are trying to build up so that the product's ready when the market's ready, right? And in some cases there is adoption of the product today, like in cases of like remote training, right? I mean, imagine you're a distributed workforce in an industrial environment and you want to get trained on a lathe machine. You don't have to go to the machine. You can use those technologies today. So there is applications, but widespread consumer applications, I would hypothesize that there is still that we are still a little too early because the tech is not there yet. So tech meets market is probably the moment at which it all pops and starts coming together.
I think about that space a lot just as an individual consumer, and I cannot wait for it to pop off personally. It is going to be an absolute game changer. I'm curious, how far out do you think we are on that?
Yeah,
before I think we have a widespread consumer adoption.
I think instead of timing, let me kind of answer that in a slightly different manner. I think what must hold true in order for that thing to go adopt, right? I think first is the form factor, the size, the weight, the heaviness. That has to kind of go drastically down for it to become a natural way to experience through AR VR, right? You don't want to be wearing a bulky headset and walking around, right? That's just not gonna work. Might work for a little bit, but it's not second nature, right? And I think when we say that it has to pop, it has to start becoming second nature to individuals. So there is that barrier of hardware. Then there is the barrier of software smoothness or smoothing out, because even a small glitch might render these experiences super tough to sort of love and enjoy. And so I think that's the second barrier where we have to cross. Do we have the elements of this? I think we've got the elements of this with, distributed computing, AI/ML at the edge, decision making at the edge. There's work to be done on the form factor side. And then there is the third element, which is what are the hero scenarios that somebody would want to experience on a day in and day out. I think meetings are a great way. Like, I'd love to see all of you in holographic content if we can.
Yeah.
And I think that's just a killer application. And that's a natural evolution of these productivity platforms where we're all remote, hybrid's here to stay. And it'd be nice to have a remote first kind of experience as we go meet up with our teams. So I think if you look at all these three things, when they line up, that's when you know that you've got some element of pop.
Excellent. Let me just take a moment to just pause and say, if you do have questions, I am monitoring that chat. So go ahead and put them in there, and I will do my best to monitor those and make sure that they're being covered. So on the flip side of this equation, you spent a lot of time asking the question of, should I invest? But on the flip side, for an entrepreneur who is in an early stage and they're looking to take on investment, what are some questions you think are critical for early stage entrepreneurs to ask of those investors or to be aware of before they take that first big step in bringing on investor funds?
Yeah, and I think there's different stages at which entrepreneurs raise money, right? And each of these stages has a function that they serve, right?
Mm-hmm.
Seed stages, hey, I've got an idea. Can I actually get to a point where, I think I start to prove it? Maybe there's some element of, product market fit early on. Then there is Series A, and then as you scale, there is B and beyond, right? And so I think it depends on the goal at that particular stage of when you're taking capital in. But from an entrepreneur standpoint, I think the single biggest question you have to answer is, do I have enough capital to take me onto the next milestone and deliver on those metrics, right? That's kind of the crux of why, entrepreneurs raise capital, right? And at Madrona, our sort of, like the way we sort of look at the market is that we tend to be investors early and we tend to be investors for the long run. We call it day one for the long run, because we believe that we can really help entrepreneurs by being with them in the trenches and grinding through the hard problems in the early days of company creation. And yes, we've also got later stage or acceleration stage growth vehicles, but primarily we would do pre-seed, seed, Series A, like that sort of where we invest out of a core fund, and B and C is where we invest out of our acceleration fund. So coming back to the question of, what does an entrepreneur need to think about? I think as they bring about external capital, the important thing to understand or to ask yourself is, hey, what kind of VC or what kind of help do I need around the table? Because it takes a village to build a startup, right? And so who's the VC? Like, what is their expertise? Have they done this before? Have they been operators before?
Mm-hmm.
Have they had successful runs with other entrepreneurs, right? Why do I need the capital? What's the real reason behind it? Like, am I doing it to prove out my product and to build and accelerate product and engineering? Or do I need it to scale, go to market? Do I need to hire more people? Do I need to build larger teams? I think being super clear on why you need the capital is important. And really giving yourself that window to prove out that you can hit the next milestones with flying colors is kind of how I would encourage people to think about raising capital. In the mature company stage, we used to call it as stage gates, where you essentially say, look, when I go to the next gate and when I've proven out these metrics, that's when I earn the right to go ask for more internal investment. A company like Microsoft would be going to the CFO and saying, hey, now we need more money to hire more people or build out more of the product. So that's kind of the stage gate approach that I would encourage entrepreneurs to keep in mind.
That's a really good framework. So just jumping into the chat here, there's a couple of questions just around, how early of a stage startup is Madrona is interested in. And it does sound like with that philosophy of, day one for the long run, sounds like the earlier, the better in many cases. Would you say that very early stage is a big portion of what Madrona looks at, or is it kind of all over the board?
Absolutely. I think it's very early, all the way to Series A to Series B. We have some folks who start talking to us as they think about the idea. and we've been around the block a lot, and so they benefit from early thinking when we can even help them refine the idea, do some research on like, hey, what does the market look like, partner with them, refine the idea, and sometimes before they even jump ship and decide to go do it full time, because they're exploring, and there's no harm in sort of bouncing the idea off someone who's been there and who's living it day in and day out. We also have Madrona Venture Labs that's run out of the Create 33, which is a space in the one floor below Madrona offices, where we can actually even help curate a team and put people who are interested in the same spaces together to go after these big hairy problems. Yeah. So to answer that question more head on, like, could be when you start thinking, could be as you're just thinking, could be right before you even have a company. And so we're very interested in, like I said, I think driving innovation in this space. Yeah. And so that's an area that's very near and dear to Madrona.
One other question is, with the recent drop in valuations in the public markets, we've got a war going on right now. How do you feel that that's impacted the appetite for investment, or have we really seen that impact happen yet?
Yeah, I mean, honestly, I think it's not impacted our thesis in terms of how we invest, where we invest, and goes back to the comment about like, we look at long enduring businesses, right? These are compelling businesses that create value for customers in the long run, have competitive advantages, and are transforming industries over decades, right? And so if you look at some of our early investments like Smartsheet, et cetera, they've taken years to go big. Yeah. And one of the things that we deeply care about is businesses that are, I would say that stand the test of time. And those are the right businesses that sort of, last longer, because you're creating eternal value. Customers see value. Customers keep coming back to using products or services. And that's kind of an area, as a principle, we look at and say, hey, great, what if this happens? What if that happens? Like, how do we de-risk against that? And look, these are real events. I mean, it's, we can see everything around us happen. Like COVID was a black swan event. Like, nobody would have anticipated that. Yet, a lot of businesses have, pivoted, and goes back to my comment about the team. Yeah. Teams figured out different business models, right? Like restaurants went from come in and dine all the way into, home delivery kind of approaches. And everyone sort of taking these pivots, and kudos to the teams out there that are grinding it out on a daily level. But that's kind of the DNA of a successful business, which is enduring and stands the test of time. So Madrona is right alongside. I mean, even we've seen some pivots within our businesses. And so looking at that as a proof point of the past to say, hey, we invest in great teams and great founders that are going after big spaces to create things that will long last is kind of how I would sum it up.
Makes sense. Are there particular areas that you're excited to get invested in? And, the flip side of that question is, are there particular areas that you think are maybe overhyped or that you personally are avoiding currently?
Yeah, I wouldn't say that there's any areas that we believe are overhyped. I think there's areas where we are still building our thesis in. Okay. And, and again, like there's, this is kind of the, if you look back like 10, 15 years, like this is kind of how the industry works, right? Like you've got a new technology, you build your thesis around it, you kind of, adopt that and move on. And when I was at Microsoft, when I first started on the Azure team, I talked to CIOs, CTOs who came and said, hey, come back when the cloud is real, right? And fast forward 3 years, like, you're seeing the adoption curves. So as far as Madrona goes, I think we're looking at all sectors. We're formulating our thesis on some of the new ones. And I saw a question around Web3. That's absolutely in our thesis. And we're looking at companies and creator economies as well. Personally on my end, I look at enterprise tech all the way from IaaS to SaaS. I look across verticals. There's some areas that I'm getting more excited about, like robotics, that we're constantly looking at. I mean, and developing thesis, like I said. But essentially, if I were to firm up Madrona's thesis, it falls into 4 pillars. First is what we call as next generation infrastructure. Think about storage, compute. What's happening with cloud computing. And that's pretty self-explanatory in terms of like, what's the next generation of that technology look like?
Yep.
The second one is low code, no code platforms, which is, hey, as creators and builders are looking at innovation, they want to do things better, faster, cheaper, and at scale.
Mhm.
And they don't want to be, gated by, wanting to write complex code. And so as the world evolves with AI, ML, there is an opportunity to go create, intelligent platforms that are low code, no code, go ride the wave of like, hey, everyone's a developer in some way, shape, or form. You're a citizen developer, you're a knowledge worker, and you want to control your own destiny. So that's the second theme around low code, no code platforms. The third one is around intelligent applications, where we believe that every app is going to be an intelligent application moving forward, right? Where the app's learning, making decisions, taking actions, and that forms the third pillar of what we invest in. And the final one is what we call as intersections of innovation, which is, transformation in life sciences, transformation in biopharma, that just innovates across how we live and how healthcare works. And so that's the fourth area of where we invest in. And across these, there's some horizontal, right? Like Web3 is a horizontal. The next gen economy is a horizontal. Robotics is a horizontal. All industries, retail, manufacturing, industrial tech, like all these are horizontal and categories or verticals that go across these theses of investments that we are then sort of looking at in terms of opportunities.
Wonderful. So taking a look here, I don't see too many other questions that we haven't covered, but feel free to keep putting those in there. And again, you guys can unmute and ask a question if you'd like to as well. So one of the other questions was around diversity in the Seattle ecosystem. What are your thoughts on there? How much work do we have left to do? I guess I would say, are we making good progress in that area, in your opinion?
Yeah, I think we're inching forward. Of course, there's tons of opportunity. I wouldn't even say that, hey, we're close to getting that done. But I think it's also about, our ecosystem and this broad group of people coming together and saying, great, how can we foster more diversity of talent, of builders, of founders coming forward and taking bets and creating long-lasting companies. And so from my perspective, I think there's work to be done continually. There is, a lot of, I would say, proactive work to be done. I think if you think about, the tech, the base of students that enters the tech world and sciences, right? I think we can all be allies, and we can all sort of, have our own ways of sponsoring that effort in whatever meaningful ways we can. It goes back all the way into investing in the next generation of students and the next generation of entrepreneurs, and how can we, give back in a meaningful way to make sure that everyone has opportunity. And I call it like, democratizing the creation of companies. And that's sort of a way that, the framework that I think we should be using in our minds is, how can we boost, how can we be allies, how can we sort of support those efforts in whatever ways we can?
Yeah. I think, hiring is always a difficult process. And, when companies are out there trying to achieve diversity, often they're saying, we'd love to hire these folks into these roles, but we're not seeing the applicants. So, going back to the early stages and the students that are just determining what they want to do going forward, I think, I've always personally felt that that's a huge area where we can encourage people to maybe head down a path where might not have been on their radar. And that's really, long-term solution to solving a lot of these diversity problems, is just encouraging people very early on, so that when people are looking to hire and obtain some of that diversity, they have the applicants that they need for it. So
yeah. The one other thing I'd say is, people often get scared of the word technology, and they feel that technology equals deep code in engineering always. That's actually not the case, in my opinion. I think there is a lot of roles within technology that are roles that somebody can get exposed to as the first step in breaking into that sector. I think a great example of this is product management, right? Product management is not about writing deep complex code. Now, yes, some product managers would get deeper and closer to engineering teams, but some of product management starts with logical thinking, knowing your customers better, right? Trying to understand their use cases. And I think if you think of a company like Amazon, like if you were a product manager at Amazon, and again, I wasn't there, but I know enough people there who can vouch for that, is to say that, look, what problems do my customers face today? That's
Yeah.
not an engineering problem. That is a way to understand and relate to the customer. That is customer discovery. That is customer experience. Once you get that, I mean, that could be a fascinating first step for somebody wanting to break into tech and say, can I sort of learn the customer experience and success side of things? Then can I learn to translate that into requirements that then I can hand over to a technical manager to say, hey, this is the problem that a customer faces. I'm going to be the interface between that and come up with use cases that we need to go build for. That in itself is a massive space to play in, even if you don't have a technology background. And even in other companies, that have been around for a long time, that are moving to adopt to being digital companies or software companies or empowered by software, there's plenty of domain experience that needs to be had in those spaces that people can sort of bring to bear as they start playing with technology. One of the companies that we invested in recently, and I was a part of the investing team, called Leaf Logistics, is a simple concept about solving the logistical problem across shippers and carriers in that space. And it was founded by people who were in that space as consultants, and they were not deep technology folks, but they built teams around them. So I do want to encourage folks to look at technology as a broad sector versus thinking of it as, oh my God, I have to be a developer. I don't think that's true anymore. And even with things like low code, no code platforms coming into being, you don't need to write complex code to build products. I think you can drag and drop. There's a lot of visualization tools and platforms that are going to be built. So there's plenty of opportunity.
Yeah, no, it certainly reiterates why the low code, no code is such a focus for Madrona. Just the number of opportunities that'll open up for people to enter into the space and truly innovate. So I appreciate that. So one question is, if someone is moving from big tech and wants to move into their own startup, what advice would you have? That's pretty broad, but that's a common change. I'm sure you've seen many, many times. So moving from big tech into their own startup, what type of advice would you offer?
Yeah, I would say first, and I think we've talked about it a little bit, but I would say it's important to understand your why. Like, why do you want to do it? What's the end goal? But I think we've talked about that enough, so I won't go back into the details of that. The second thing that I would say is, it's not an overnight thing where generally people wake up and say, oh, I want to do a startup, right? Leaving big tech. I think it's a journey. Mm-hmm. And so going through that journey is very important. I mean, look, when I was at Microsoft, I went through the journey of like, hey, what does the world of VC look like? And I've been having conversations with the Madrona team for a long time. And it wasn't just a day where I woke up and said, oh, great, and I dabbled in it with some investments of my own. I was an advisor to some startups, and I slowly inched my way into trying to understand more about that field. And every time I had a conversation with someone who was in the VC shoes or close to the ecosystem, I actually learned something new. And I think the best way for somebody in big tech to think about doing their own startup, it's not the technology stack that is different, and that rarely matters. Yeah. What matters is, are you going into it knowing all the things that can go wrong, and do you have a plan, or have you thought about how would you de-risk that? Are you surrounding yourself with the right people? I mean, there's real problems that people hit when they do their own startup. Like, how do you hire people? Because hiring somebody while being at Microsoft and hiring somebody while being at a startup is totally different. Right? You're competing against the Microsofts, the Amazons of the world for core talent. So how do you bring people on? How do you hire? How do you set up shop? And so talking to people who've done this before is super important. And I wouldn't, I don't want to underplay that. I actually think that that's the most important thing that you can do, is to talk to people who've just been on that journey and who've just walked on that path. So if you're at a big tech company and if you want to go to your own startup, I would say, firstly, go talk to anybody in the startup ecosystem, including founders, VCs, operators, people who are at startups. And then secondly, find a group of founders who've just done this, like maybe a year or two ago, because they will have the freshest perspective of what it was like to do it a few years ago. And simple things. They'll tell you about the tools. They'll tell you about what mistakes not to make. And so just assimilating all of that and having a game plan about how we do want to go about it is super critical. So I think if I were to leave someone with what to do, I would say just do those two things. Surround yourself with people who've known a lot about the space, who've been there for a long time, and then go find someone who's just been on that journey, and you'll learn so much from there.
Yeah. Do you feel that right now there are particular problems that there's an underinvestment in that, where maybe the problem exceeds the amount of attention or investment that it's receiving right now? Any areas of opportunity that in your mind we're just not seeing the interest or investment in right now?
Gosh, I think there's so many, and so it's hard to sort of outline all of those. But if I were to just pick a few, I would say one such area where I do believe is robotics. And I think I've talked a lot about like, hey, robotics has been around for a long time. There's always been that promise, but in my opinion, I think something has changed that is going to give this sector an impetus to drive towards more autonomy, right? I mean, we're already seeing autonomous cars. But the world's not too far where you would imagine, a lot of the tasks that we do are being done by intelligent machines and intelligent solutions for that matter, right? I mean, there's a lot of inefficiencies in the way in which we operate today. And so, having those things done by, I would say, autonomy brought up or autonomous platforms is going to be, an area that is ripe for investment. I mean, think of all the tasks that we do today and how can those get, repeatedly done and with intelligence. I think that's the kicker, right? Because you could very easily automate stuff, but can the automation happen at a level of intelligence where that piece of hardware or software can react to live situations in a manner that a human would react to?
Yeah.
And so I think that's just an area where I feel is ripe for investment and ripe for growth.
So kind of a longstanding debate on robotics, the humanoid factor versus a more utility-based form factor. Do you personally believe that for robots that are going to be interacting with humans, maybe in the healthcare space, that they need to have that face, that humanoid factor for that to accelerate adoption, or do you think we'll eventually get to a level of comfort where we don't necessarily need this familiar human form, because it's certainly a more technical challenge to build a bipedal robotics? I'm thinking, specifically of Elon's robotics in the suit that they had up there. How important in that robotic space do you think is trying to obtain a recognizable humanoid factor, or is that a non-factor in your mind?
Yeah, look, I look at it slightly differently, right? I look at it from the perspective of like, what's the maturity curve of these things? And, if you think of it, like what scenarios today are not being solved that could be solved in the future? Like if you think of remote surgery, that's just one in the healthcare space since you talked about it, right? Yep. Does everybody in the world have access to, surgeons? And the answer is maybe not.
Yeah.
And so can you imagine a world where the best expertise can be applied to the most complex of problems, irrespective of geography? And whether that's done through software, whether that's done through hardware, robotics arms, or whether that's done through a combination of the two rarely matters, because what you're optimizing for is the solution at the end of the day to solve a customer problem that today you can't solve. Now, there's a long-standing debate, like you mentioned, which is, hey, where does the human sort of step in and stop or course correct, right? I think the best articulation that I've heard of it is, look, I mean, robotics is a maturing space. Things will go wrong, and things will go wrong either because of inherent failures, or things will go wrong because there is some race state that you get into that the machine cannot correct itself. And so I think the question is to then say, hey, what happens when you get into those tricky scenarios? Like, is it interjected by a human, or is it interjected by a self-correcting machine? I think that's the bigger question, in my opinion. And I think we are a little bit, I would say, a few years away from at least getting to those states where, we have a clear path on what corrective mechanism means. A corrective mechanism when a machine's handing you coffee is very different from a corrective mechanism when a surgery needs to take place. And so I think it's a little bit of like different strokes for different folks. But I think net, I remain very bullish on this category of autonomy and for lack of a better word, like intelligent machines and intelligent systems that can, take mankind to a different level, humankind to a different level.
Interesting. Well, it looks like for the majority, the questions are kind of slowing down there, but I do want to throw out one more opportunity if anybody wants to unmute or has any additional questions in there, maybe that I didn't cover, please, go ahead and resurface those. Just scrolling through. I'll give a moment for that.
Hey all, this is Chris DiCostanzo. I did have a question. I apologize if it was covered, but I didn't really hear it come through. But it was more, when Madrona suggested that, or Aseem has suggested that it's really day one and beyond, and that's where you like to invest in these startups, is you're kind of in it for the long haul, which is great. How do you view organizations that are viewing a new product launch as part of an investment opportunity? So, again, it's not a product in a very large company. It's a product in a startup that's existed for a few years, but a new product launch is really going to reinvent the way that a company has opportunities to go to market, and of course the growth that could be there. But it's not a brand new company, if that makes sense.
Yeah, I think it's a good question. And I think I'll answer it in sort of a broader way to say that, look, at the end of the day, we look at it as a company, right? Is the company sort of driving expansion in a different area for which there needs to be capital raised? And goes back to my previous point of what's the intent of raising that capital, right? I mean, look, there's a lot of vehicles for a company to go raise capital, right? There's debt, there's bank loans, there is private equity capital, there's VC capital. I think the question really is like, hey, what's the best strategy for the company to sort of go raise this capital, right? And that's kind of an example where sometimes even companies look at B stages or C stages to go augment their products. So I think it really depends on the goal or the metric of what you're trying to hit with the next round of capital raise or capital deployment. And Madrona certainly looks at it as, is it accelerating the company? Is it helping it grow rapidly? And what role can we play in sort of getting to that stage?
Yeah. Okay. Thank you.
Anybody else?
Yeah, I have a quick question for Aseem as well. I found it very intriguing that both you, Aseem, and Erik both focused on AI VR. And then as you close your remarks, Aseem, you also talked about intelligent machines, or more importantly, intelligent systems. I would think of that as an intelligent system of intelligent machines. And the point that you're excited about those, but there's I'll phrase it as enabling technologies maybe are lacking at this point to really make those surge forward and be part of our lives. I want to ask a question with regards to the internet and the cloud infrastructure, or perhaps more importantly, how we are engaging and utilizing those infrastructures, and where you see that is falling short of the needs that these two areas are going to need, intelligent systems and AI VR.
Yeah. I would actually say that, I think the cloud and distributed computing in general, along with, fast networks like 5G, have kind of accelerated the move towards intelligent systems, right? And I'll tell you why. When I wrote code, I used to worry about memory management, performance optimization on a chip. Like, you could only write like a finite amount of instructions, but that's not true of today. The folks who are writing code today, commission compute network storage on demand, and so there's no dearth of system level resources. 5G has actually made it possible to convey and to pass on large amounts of data across geographies, and that's led to quick decision making and quick turnaround, right? And then there is the intelligence with AI and ML on top of these systems that can make decisions at the edge itself. And we've all heard about it and read about the edge becoming more powerful. And an example where all of this comes together is the work that Microsoft did with a company called eSmart Systems. And eSmart Systems basically build what we call as intelligent drones. And they were trying to solve the problem of identifying physical defects across electrical lines. So if you imagine, how do defects get looked at today across electrical lines? Some person drives 10 feet, climbs up a pole, looks at defects, and then comes back again and does the same thing over and over again. Versus here, you've got an autonomous system that's following the electrical line, physically using CV to identify defects, and then reporting back and saying, by the way, there is a problem here that seems to be something that you need to look at this location 10 miles from the source. I mean, that's just efficiencies that you've driven in the system. And all that's possible because of infrastructure, distributed computing, network, as well as these technologies at the edge. And so I think as we invest in next gen infrastructure, these scenarios are only going to go light up. And they're going to further accelerate the deployment of what I call as intelligent systems or intelligent machines. And this really fits within the Madrona thesis of like, hey, as we think of things moving forward, there's intelligence sprinkled across everything. So hopefully, that answers your question on how we think about infrastructure here.
Thank you, Greg. I appreciate the question. So one more question. How does Madrona look at the balance between social impact of a company versus the just raw growth opportunity? And how do those weigh out in the decision-making process?
Yeah, I mean, look, CSR is definitely an area that we all can do better at in the broader ecosystem of things as well, right? I think there's a lot of companies striving for standards across these and, striving for, making sure that there's more responsible ways of attaining growth. And Madrona is no different, right? But we're looking at it as what's the right way to sort of go achieve that growth while having, impacts across society, right? One example is around, net carbon neutrality and how are we thinking about that? And, we have a developing thesis within Madrona on, how should we and what are the next generation companies that are even going to accelerate, the move of bigger enterprises being more responsible. So I don't think that there is an either or. I think the way we look at it is an and that really forms the basis of like, hey, how are we looking at, growth holistically? Because growth, in our opinion, is not just economic or fiduciary growth. It's also, corporate responsible growth and growth of the ecosystem and giving back into the ecosystem we play in.
Very good response. I appreciate that. You're welcome, Chris. So yeah, we're getting close to the end. I just wanted to give one last opportunity. Again, really enjoyed the interaction so far. If there are any more questions, please go ahead and jump in. But in absence of any more questions coming up, Aseem, I just wanted to say I really appreciate this opportunity today. They're lucky to have you there. We didn't get any of the cricket backstory or any of that today. So this was a pretty focused, based on the thing, but I figured with all that's going on, it's probably best to avoid the Seattle sports conversations right now anyway. It can be pretty contentious issues. So I'm sure you have some thoughts there. I will say a lot of folks on the call are very interested in getting your contact information. So I would say, please reach out to E-Jane or Katie Rice at the Alliance of Angels, and I'm sure they'll be able to make that connection. Of course, you're on LinkedIn as well if people want to reach out there. But yeah,
I'm on LinkedIn. You can reach me at Aseem@Madrona. That's just a simple email address. Of course, I couldn't leave this call without saying hello to some familiar faces that I see. John Litton, learned a lot from you, and thanks for being on this call as well. Madhup, I've worked together in the past. And then Chris Phillips as well. I think some familiar names. It's great to see all of you guys in the Zoom world. Hope to catch up sometime personally.
Yes, good. This is Brad Chalou. Could you repeat the email address, please?
Yeah, I'm Aseem@madrona.com. Here, I'm going to put it in the chat window.
Thank you.
And
Great
also,
to see you, Aseem. And we'll be in touch. Thank you.
excellent.
Right. So thanks, Erik. Thank you for moderating today. Thanks, Aseem, for spending the time today sharing your wisdom, your experience with all of us. And also thanks to everyone for joining and participating. All right. So great. We wish everyone have a great weekend. Thank you to all. You take care.
Thank you.
Thanks, everyone.
Thanks, everybody.
Thanks, Aseem.